Welcome. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Ajay Sharma. And the closing trades are looking okay. Of course, on an intraday basis, we had seen a bit of a dip, but we managed to claw back above the 19,550 mark. Having said that, take a look at how the various segments of the markets are working out. If you look at the banking space, that's clearly underperforming today. But on the flip side, you have the mid-cap space and small-cap space that continues to fire away in the trading session. So a very, very strong outperformance coming in from the broader markets yet again as compared to the banking space. There you have it, the comparison. The mid-cap is up 1%, whereas Bank Nifty is sitting in the red. What is actually doing okay is Realty. That continues to build on gains. Pharma is having a good day as well. And then IT has managed to hold fort for the bulls as well. So those are the important cues that we are watching out for. The other space is the profit booking, which is visible in public sector entities, the banking names as well as metals. All of these were firing away in the trading session yesterday, but today they are coming under pressure. Separately, you have Angel One, India Bulls Housing as well as Sri Renuka, which are seeing some amount of profit booking. QSR space is quite active. Pull up a Jubilant as well as Devyani. Both of stocks are on fire today. And what's also gaining in trade is the railway stock. So India Railway Finance Corporation, Science DLM, that stock is higher by 17%. And then the entire media pack, Ajay, whether it's a Z Entertainment, a Dish TV, Sun TV, Z Media, they're all firing away.
In fact, I would look at it slightly differently. Look at how the composition of the market is right now. If you look at Friday's low and today's high, you would see in 3 trading sessions, we have gained almost 350 points on the Nifty. The other point is that if you look at the Nifty gainers, you'd see either IT names or Pharma doing well. ITC has come back. Titan is the name. It's appearing that as if the market is positioning itself to slightly defensive, if you look at it. Yes, you may say that the mid-cap index has made a 40,000 kind of levels, fresh all-time high. So, I mean, the guards are completely off on the mid-cap, small-cap part, but hospitals, pharma, some of the Coal Indias of the world, Sun Pharma, Apollo Hospital, at least the top 10 gainers in Nifty is giving an impression that this leg of the Nifty rally, which we used to get a hurdle around the 19,500 level, is being led by the defensives. But Kunal is here, Nuresh is here. They'll do rest of the analysis for us and also help us find some trading ideas in this kind of a market. Of course, some other guests are also joining us. Ashish Anand, oh yes, Ashish Anand is also here with us. But a quick view, Nuresh, what are your thoughts on the way we have taken out 19,500? If the closing comes above 19,500 today, closer to 19,600, will it be taken as a good sign for the rest of the series?
So overall, the signs are pretty good across the board. If you look at all the other indices, if you look at the Nifty 500, we hit a new all-time high yesterday as well as today. The Nifty 50 equal weight, we hit a new all-time high. The Nifty total market cap, an all-time high. So the only one lagging is Nifty 50, and that is purely because 3 to 4 names in the Nifty continue to be laggards. HDFC Bank has gone nowhere, continues to be drifting lower. Then you have Reliance Industries closer to 2,400, 2,420, staying at the same place. Then you have Kotak Mahindra Bank going nowhere. And in between, even an ITC or a TCS, Infosys were also struggling. We've seen some bit of a recovery in the IT pack. So if you look at the weights of these top names, HDFC Bank is closer to 13-14%, Reliance is 10%, you have 3-4% of Kotak. So 30-40% of the index clearly does not have a strong trend. So once we start seeing the trend, we could be breaking about 19,600. So that's the view we go with. Till the time we don't break 19,300, the chances of an upside breakout continue to be strong. And watching out for Reliance Industries, first day where it has started showing some strength. So if it starts sustaining about 2450, that could be interesting. So overall, the bias is positive, waiting for heavyweights to give a confirmation.
Well, yes, that wait for the heavyweights to get confirmation just continues because other than maybe pharma and real estate, not much is happening in the trading session today. But Kunal, your view on the market right now?
Well, so I would expect this trend to continue, even though the large caps are missing in action, but the mid caps and small caps are trying to fill up this vacuum of sorts in terms of performance from large cap names. It's very difficult to anticipate that when would this top out, because even a jump, for example, in technical terms from an 80 RSI to an 85 RSI could lead to a significant jump in stock prices, and we've seen that happening across the board for many of the stocks, even though they've reached some sort of or slight overbought territories for themselves. So it's best to have a trailing stop loss into these stocks and keep on riding the trend on the upside.
Okay, so that's the kind kind of take coming in. But Kunal, the question is it getting very, very frothy or toppish in the mid-caps? Would you probably look at taking some profits off the table?
So yeah, it depends. I think if you've made 50% to 80% of profits in many of the stocks in railways, defense, and such other spaces, then I think it makes sense to book out at least 50% of the profits, because you know that these kind of rallies, they would not sustain for a long period of time. And whenever these stocks go into a correction, say now in the next couple of days or in the next couple of weeks, you would probably expect that these stocks would go into a healthy correction of at least 15 to 20%. So it makes a lot of sense to book out 50% profits here.
All right, let's go across to the Global FinTech Fest, which is happening right now, and check out the commentary coming in from Madhvi Puri Bhuchar, regulator.
Would automatically be of a lower level. So this move of risk-based supervision to risk-based regulation to segmented regulation to now very granular level regulation is something which we see that artificial intelligence will have the potential to give us that ability to do that, and therefore make life a lot easier for all regulated entities. But even more importantly, I think that the biggest opportunity that fintechs today have in the markets is that over the years, the regulator has focused on, and that has been its principal mode of regulation, is disclosure-based regulation. And we know that internally within SEBI, we were at times questioning ourselves that have we made disclosure reach a level where it has become information overload? Has it reached a level where people now actually cannot make out what they are supposed to make out of the disclosure? This was a thought that was worrying us. But now, as we see the way that artificial intelligence is evolving, we believe that whether it is in the space of disclosures made by listed companies or by mutual funds or by PMS managers or investment managers, anybody in our domain, those disclosures, if artificial intelligence is applied on them, this can become the tool for giving very, very high quality input and advice to possibly every citizen of the country at a very, very granular level. This is the potential that we believe that artificial intelligence and fintechs can leverage. Today, we have at SEBI already declared that data in the markets is a public good. It is infrastructure. It will be owned by the citizens of the country. So every piece of data that is mandated for disclosure by the regulator is available free of cost, conveniently downloadable with archives, and that is the mandate.
Okay, so those are the commentary coming in from the SEBI chairperson talking about how the regulation has been made very transparent and how overall regulators are working for the betterment of the investors as well. But Ashi Anand is also with us. So Ashi, let me take a view from you as well on the markets. Do you think a lot of spaces are now getting overbought, overvalued, and one needs to be very, very, have a lot of caution now in making fresh investments into any of those verticals?
I would quite think so. As in, if you're just looking, especially in the small and the mid-cap space, right? You've seen very sharp run-ups. Especially in anything related to capital goods, defense, railways. Some of these have started becoming extremely expensive. I think we're starting to really counter in a lot of the optimism around some of these themes. Some of these actual implementation and actual growth around capital goods will take some more time. But you're actually factoring in all of this positivity upfront. And you're seeing this in this space, but you're seeing this across the range. We are especially more concerned around mid and small caps as compared to the large cap space. We're clearly seeing greater value and greater comfort in large caps. So that's broadly the way we're seeing the market.
Ashi, I want to talk to you about the signs which you look for. Is it valuations alone? Is it the way some of the micro cap IPOs in the SME side getting a 6, 7, 10, 20 crore IPO, getting a 10,000 crore subscription interest? What are those signs beyond valuations alone which you look at, which have historically helped you, spot the tops in in micro caps or small cap, mid cap area of the market?
So there's clear evidence, right? So what you indicated, a lot of froth around IPO market, that clearly is an area of concern. You can also see this around certain themes which are kind of more popular. So you start seeing valuations start to have a disconnect with underlying fundamentals, starting to really factor in a lot of the growth, and you start seeing valuations of companies without very strong cash flows, without healthy ROEs, balance sheets not as great, kind of starting to command 50, 60, 70 P upwards. So you start to kind of very clearly see signs of froth being built up in certain areas. And that is one clear indication. You can also see this in terms of the way small caps and mid caps have outperformed large caps. And the third key indication, everyone in the market knows some of the names which are the higher quality names and some of the weaker businesses. As you start getting closer towards market peaks, especially in certain pockets of the market, you start to see some of the lower quality names actually start to move up quite a lot. And you have clearly been seeing signs of this over the last month.
Point taken. So that's the kind of verdict coming in on the market moves right now. But just wanted to address some of the stocks and news. And of course, there were large deals that happened on Nykaa, IRFC and BKG. In fact, Nykaa is seeing one of the biggest moves that it has seen in a monthly basis. And it's not a very big move. It's just a 3%. But given the fact stock has been underperforming, we're just highlighting that. Order wins have been coming for Dilip Bilkon and RVNL. So those are a couple of counters. And then Raymond, of course, deserves a big mention, given the fact a couple of brokerage initiations have happened right from Jefferies as well as Motilal Oswal. 2600 is the kind of target that these brokerages are talking about, despite the run-up that we have seen in the stock price already, given the fact they're talking about that growth and simplification is going to come by and the past concerns on debt and corporate structure have been addressed. Ashit, you look at this one closely, Raymond and the rest of the textile quasi-realty kind of plays?
So we do not Raymond specifically, but we do kind of look at the branded apparel play space. That is a space that we do find quite appealing over the longer term. Obviously, it's a direct play on discretionary consumer demand in India. And if you look at global examples, as an economy crosses a $2,000 per capita mark in terms of income, you start to see a big rise in discretionary spends. And branded textiles kind of fits very well within that space, right? So this could be branded textiles. You're also seeing real estate starting to do well. And real estate, you've actually had a lost decade in terms of really nothing happened in the real estate space between 2010 to 2020. So residential real estate is another space that we like quite a lot. We are a bit mindful about commercial real estate because we see work from home risk kind of playing out there. On branded apparel or other discretionary consumption names, while the growth potential is very appealing, the main problem is a lot of this is really factored into valuations. So one really does need to look at how much you're paying when you're buying into these names.
In fact, we spoke to the management of Raymond regarding their growth strategy and some of the triggers which those reports are talking about. Let's hear out the commentary a bit.
In April, we have already announced the demerger. The process has been put in for place, and we are currently waiting for the various respective authorities' approval, which should happen. And we have given the timeline at that point of time, 12 months. We are absolutely on track for that 12 months. I think by April, May of next year, we should be able to list the two businesses separately. You know, as we mentioned, that we don't have a very large capex cycle to go because the businesses are such that we are deploying more and more on a little bit on the outsourcing model. And especially where the capex will go is on account of the garmenting business by incrementing 19 lines, spending almost 200 crores. That will enable us to become the top 3 suit players in the world. Now, that is one part. The other part we talked about also on the technology investments. I think we have lacked a little bit of technology investments in the recent past. So we are going to put another 100 crores of technology investments. But on top of it, we are not seeing any large capex cycle.
Right. Nuresh, I want to talk to you about some of these lenders from the NBFC space which are gaining smartly in trade. Mass Financials is gaining about 18.5%. We also see Poonawalla, after a good correction from 450 to almost under 400, come back. Out of the two, which ones do you look good even from a long trade here on?
So Mass Financial looks interesting given the price tick today, but would wait for a dip on this one. But technically, sustaining about 950 levels would be a major breakout for the stock. That was the high for the last 1.5 year. And overall, the whole NBFC space looks pretty promising. There have been slow and steady moves across the board. So watching out for the whole space, something like a Satin Credit Care is on radar, something like Spandana Spurti, which is also seeing a lot of block deals. So these are the two names also on radar, but the whole space looks interesting. And most of them are newly listed over the last 3-5 years, which look more interesting.
That's a take coming in on some of the microfinanciers. But Ashi, what about the entire QSR space? Do you have a favorite there amongst the likes of Sapphire, Jubilant, Devyani? They're all on fire today.
So QSR, you're seeing a clear divergence in trends. So I think pizza as a category is clearly quite significantly under pressure. You've seen milk prices and cheese prices move up. So we kind of just wait out any exposures around pizzas, as in any of the stocks with large pizza exposures, the Domino's and the Pizza Hut franchises. We probably stay away from that in the near term until you don't see some kind of deflation in dairy prices. That said, the whole kind of burger franchises are clearly doing a lot better. So some kind of bets around there could work. But the main concern again here is around valuations, as in you are really factoring in a lot of the growth, and some of these franchises have really just seen growth pick up recently. We'd like to see this kind of growth sustain over a slightly longer period before being comfortable with the valuations where they are at this point.
In fact, interestingly, burgers gaining in trade, Jubilant, even Devyani, which is KFC and all of that. But Varun Beverages is not, because they usually go in tandem. If you see, you always order a bottle of Coke along with pizza or burgers.
Maybe we should check Som Distilleries and United Spirits. Have people upgraded themselves to liquor versus soft beverages?
Are you talking about mixing? It's
Yeah,
not even
actually,
Friday. It's not
they are
even
good.
Friday. She's already on mixers. Huh? All right, let's take a short break. We'll come back and...
I think I need that break, right?
I think you do. I think you do. We'll come back and take more stock ideas from our guests. Since you do a lot of studies regarding the small cap end of the market as well, check out the small cap index and talk to us about, the fundamentalists are saying that small cap index has gone to a premium to large cap. But again, that's a fundamental talk. What are the charts telling you? Is there strength even in the small cap index even from here on?
So if you look at, yes, there has been a huge divergence in the small cap and the mid cap index with the Nifty 50, but there is a divergence of Nifty 50 even with the Nifty 500. So the thing we look back to is what happened between 2018 to 2019. In that period, Nifty went up from 10,500, 11,000 to 12,400. And that was a time we never thought that index can go up and small caps can go down. And that is the time where index went up by almost 15% to 20% over a period of time. And the broader markets fell by 25-30% mid-cap indices, 40-45% on the small cap index. And during that period, we used to have this meme called Trivedi Bachega or Ritik stocks, which is where HDFC Bank, Reliance, Infosys, Kotak, ICICI, they were the ones which were doing well. Reliance was up almost 50% in that period. Now we are on the opposite end of the same cycle, which is where these names, which were major outperformers in 2018 to 2019, are lacking behind, and the small caps are doing well. So in this case, yes, the divergence is huge. There can be a correction going forward, but the only way we look at it is one should be ready for an opposite of 2018-19.
Nuresh, who are you referring to as Trivedi when you say Trivedi bachega aur baki sab mare jayenge?
So that's a Sacred Games analogy back in the day.
Yes, I remember. I remember. No, that particular graph which you just put out, where the small cap index is actually, it's like a golden cross coming from lower and outperforming the Nifty. It is a bit, making people nervous because the valuations of many of these components of small cap itself have gone way higher than their 5-year, 10-year average. And the commentary which is coming is not very bearish. They are talking about the management we get on almost an everyday basis on the channel, even from here levels giving very positive guidance. So let's see how it goes. I have a question with Asi on the new IPO which has got listed. The Pugalia IPO which got listed today, 60-70% premium to the issue price. If you may have, Ashi, you have you tracked that IPO? It's a small cap infrastructure slash kind of a EPC company, Vishnu Prakash Pugalia, or maybe the space, because the order flow coming to their side is very good, and we got the management also earlier in the day, still at 148.49. Have you seen it, that space? Have you looked at it?
So we've looked at the space for sure. I'd rather not speak too much about the specific company, but if you're looking at the space, you're really having a lot of traction around government spends on the entire infrastructure space, and you're seeing this across kind of segments, roads, ports, airports, etc. As we kind of start moving into an election kind of a season, I think you're also seeing a lot of traction here. Over the last 2 or 3 budgets, probably for the first time in the 20 plus years I've been kind of watching budgets, you've actually seen capital spends outpace kind of consumption spends of the government. So there's a very clear impetus of the government towards improving infrastructure in the country. And there clearly is a very long space to grow. So there is very clear headroom for growth. And valuations across most infra companies are still not extremely high. Now, while there is attractive growth opportunity, it's important to understand that these businesses aren't very high quality businesses on their own. They typically aren't free cash flow generating. There is a large amount of money which gets stuck in working capital. There are kind of advances that they basically guarantees that are left behind with the government post-project completions. You can have delays. So if you're looking at pure financials, ROEs, balance sheets, and cash flows, the businesses don't necessarily support very high premium multiples itself. So as long as infra growth is there, one can look at the space, but we'll be cautious about very aggressive allocations, primarily because of the inherent weakness of these business models.
Coming in on infrastructure vertical as a whole, but actually I'm curious to know, have you been following this entire deal which is brewing in the pharma space, probably the making of the second largest domestic pharma company by market cap, if at all Torrent Pharma does buy Cipla? What do you make of that?
So Torrent has just done extremely well in terms of acquisitions, as in they've got a decade plus track record of acquiring companies and actually turning them around quite well. M&A is typically a kind of space where a lot of companies end up faltering, as in you've seen attractive acquisitions take place, but then those acquisitions not faring out as well as expected. Torrent has really bucked that trend, and you've seen them multiple times actually do very well with the companies that they've acquired. So if they were to acquire Cipla, it does become a very, very valuable franchise. Really no comments about whether the deal will happen, won't happen. But if it were to happen, it definitely becomes a very large and interesting powerhouse. And within kind of pharmaceuticals, we actually see greater longer-term value in terms of domestic franchises, because it's a branded business, unlike in the US, where you're selling as generics, and that pricing tends to get commoditized a lot faster there. Branded generics in India are closer towards consumer brands, giving you much greater longer-term pricing power. And a powerhouse such as the type you've indicated could be quite interesting, definitely.
Okay, point taken. So that's the view coming in on pharma. Definitely a tilt towards the domestic companies. But quickly, let's talk about some of the stocks which are seeing quite amount of price volume action. Starting with Karur Vysya Bank itself, it's seen a breakout from the downward sloping resistance trend line. The volumes are almost 3x the 20-day average and has hit a 1-month high on an intraday basis. So that's about Karur Vysya Bank. You also have Trident, which is doing quite well for itself. Maybe a rub-off impact of Raymond coming in. That stock has hit a 52-week high on an intraday basis. The volumes almost 2.5x of 20-day moving average, and it has been advancing for the third consecutive week. So the momentum on the positive side continues with this one. Let's move on to Jubilant FoodWorks as well. It's hit a 7-month high on an intraday basis, and look at the volumes again. Very, very heavy, almost 3x the 20-day average. Kunal, do you have any favorites from this list? Karur Vysya, Trident, Jubilant FoodWorks, and even the ancillaries and the entire verticals here.
So Jubilant Food looks interesting. I think that's a stock which has given a breakout 500 mark for Jubilant Food, the 200 DMA for the stock. The entire space, I think Jubilant Food, Devyani International, many of these stocks today are up some 8+% for themselves respectively. So that's one of the major reasons why you're seeing the volumes being consistent as well as the price action being a lot more consistent into this space. I would also be very keenly inclined towards the PSU banking stock. So I think other than Karur Vysya Bank, which you highlighted in terms of a banking name, I think many of the other PSU banking stocks like Bank of India today, I think is inching towards that 93, 94 mark, looks very strong for a potential breakout of that 100 levels for Bank of India. And so is the case with many of the other PSU banking stocks. Even Union Bank is trying to claw back again just around that 90 plus mark for itself. So looks to be an attractive space. And I think, this market has highlighted that you should ride on stocks which are riding on high momentum or trade on high momentum rather than betting on stocks where there is lack of momentum, because it's very difficult to try and figure out when would this time-wise consolidation end for many of these large cap stocks.
There's a market-related stock which is CDSL gaining very smartly in trade, and this market infrastructure-related stock, be it BSE Limited, which rallied almost 30-40% in a month. Today CDSL is coming back. We have seen angel broking. Today it may have corrected, but in the last 1 month almost come back to 2000 levels, which it had corrected from to 900. 50% correction got retraced. Angel 1 will come up on your screen. Asi, have you looked at some of these market infrastructure related kind of stocks as well to understand, also to drive that point that the rally may be cyclical as it always, but the financialization trend which is happening in India, that is more structural actually.
No, so actually coming exactly to your point, right, that structural play is very, very interesting. We see it as a very clear trend over the coming decade. India still has, in the Indian household, still is very over-indexed in terms of the amount of savings that are going into fixed deposits, into gold and into physical real estate. While you have seen clear trends of financialization of savings over the last 5 or 7 years, you can see this across the number of demat accounts being opened, the way SIP books of mutual funds have increased. You can see it in the growth of the PMS of the AIF industry. You're still in very, very early days of this trend. If you compare kind of the percentage of savings that go into equities or financial securities of India versus any other kind of major global market, we are at a significantly low penetration. So it's not just the market ecosystem, right? So all of these market network kind of companies with the CDSLs, the BSEs, Angel Ones, etc., but even broking platforms, insurance companies, asset management companies, we see this entire space as being very interesting from a long-term value creation. That said, given the fact that they are inherently dependent on market volumes, they will come with kind of volatility over the nearer term, but over a longer term, we see a lot of value creation in this space.
Okay, so that's the take coming in on some of these financial ancillaries and how the financialization of savings is actually working out. Let me ask you, Ajay, do you know which is the third largest NBFC by market capitalization in the country?
I think it must be a PSU, if not.
Yeah,
correct?
and I was thoroughly surprised by looking at that name
Even
that
I
came out
was.
today. I mean, I did not imagine that being better than Shriram Finance and Manapurams and Muthuts of the world. Like,
yes,
completely blew me away.
Surprised. I was equally surprised.
You know what?
Because they don't advertise themselves. They should.
Advertise, and even you didn't imagine them probably. I mean, because
even
obviously
the brokerage
public,
community did not cover them very much.
Are you intrigued as well as to which that stock is? Let me go across to Somit to get the answer, because we are talking about IRFC that has seen a massive, massive run up. Of course, the stock has seen a solid rally in the last one year itself, and it's the third largest NBFC by market capitalization after what, Bajaj Finance, and maybe you add Geo Financial Services to the entire vertical. Now, what does the company do is basically raise funds for government to fund infrastructure and railways. And if you look at the overall shareholding and shareholding pattern, of course, the government is the largest holder with 83% stake, but it's the public which owns almost 14%, and that's the third largest NBFC that we're talking about. You know what? We'll do one thing. We'll take a very short break on the show. When we come back, we'll try and get Somit back online to talk to us about this company as well. Welcome back. Well, the Nifty is holding up all right, 19,574. It's a banking index that continues to be under pressure. So let me take it across to Gurmeet Chadha to get his view on the same. Gurmeet, we were hoping HDFC Bank will come out of the hiatus. Kotak Mahindra Bank, of course, that entire leadership flux it is in. ICICI Bank delivering great numbers but not getting the kind of valuation or the investor interest right now. What would make the interest come back in these large cap private banking names?
Anisha, individually probably it would be different. So Kotak, I think, is more succession planning. The market wants to see, by now it is, I think, almost established that the succession planning is, will be internal. And the two names look like Mr. Manian and Ms. Shanti, which have been veterans for the bank. I think what we got to see what is the attrition, because typically there has been some level of attrition at mid and senior management. So it will take a little time, in my view, to stabilize. Plus, if you see the last quarterly numbers also of Kotak, the quarter-on-quarter loan growth was just 2.5%. Growth of 16-17%. Now you're getting that growth in a lot of other banks which are 2-book multiple or less than 2-book multiple. So it's always relative valuations, but it remains a very solid bank, so I think it's consolidating. HDFC, again, the market wants to see how the combined entity would deliver. There is about some overhang because of the weight being now more than 10%. So a lot of funds have to shed that. So market wants to see whether how much pressure really comes on CASA, what is the pressure on cost of funds, what is the NIM compression which will happen. And that's the reason, you're finding these stocks in a range with probably some downward bias. But I don't think so any long-term thing changes as far as all the top three banks are concerned. And then you have had, some good performance from tier 2 banks, some mid-sized banks like IDFC First, like Federal Bank. And so there's some rotation of capital which is also happening, and some of the good financials, some very niche plays in NBFCs, etc. So it's some rotation of money happening there. Otherwise, broadly, it's okay. I think I don't see financials in terms of real stress coming. And the interest rate cycle is still very much, at some point of time, the credit cycle will also reverse. Some stress will come, but probably we are some quarters away.
Gurmeet, did you look at Jio Financials? Lately, I mean, it rallied from, made a low of 202 and then went to 265. Have you got it in your portfolio or not yet?
Ajay, we do have it in the portfolio. Courtesy, we have large holdings in Reliance, and also we bought some, when it got listed, started getting trading, some probably at the lower circuit, because we again are on the very long side. This is something we know that over 3-4 years, a team which has KV Kamath, Hitesh, and some great bankers they are hiring they're not here for just 10-20,000 crore lending book. They will grow this and probably grow this through some inorganic acquisitions. So plus they are getting into asset management. They put up a huge capital. They will get into insurance. They already have digital payment banks. So it will be a very, very formidable player. But it will take time. For example, they hardly have, I think, maybe 15 people in collections. There's hardly any collection infrastructure in place. The credit underwriting team would, evolve. The focus would be more on SME and unsecured lending to begin with. Secured, I don't think so they're touching to begin with. But they have the capital and the network to really grow fast, as well as also acquire assets. So this is a more of, you should not look at it from a near-term play. Obviously, the stock has run up post-listing after getting being in that segment. But this has to be a more 4-5 year play where you're betting on something becoming big over a period of time. But as I said, in the near term, we are more happy with something like Home First, very solid player, good AM growth, great collection and credit capabilities. Something on the other side. That's something which
Okay, so Home First is one of the stocks that you like, and Jio Financial is already in the portfolio. But just keep an eye on Jio Financial, because 2 days the stock has not been in circuit, and Nuvama had come out with a note that if the stock doesn't remain in circuit for 2 days, it's likely to move out of the Nifty on the third day. So we'll watch out for the volumes on that one tomorrow. Almost 105 million kind of shares might see passive outflows on account of it getting out of Nifty. So we'll watch out for that. But since we're talking about NBFCs, Jio Financial is probably the second largest NBFC. The first is no prizes for guessing, that's Bajaj Finance. But which is the third one? Let's go across to Somit to find that out.
Well, it's IRFC, and the reason why we are talking about this stock is not only the fact that it is now the third largest NBFC after Bajaj Finance and Jio Financial. In fact, Jio Financial has not started business, so if you exclude Jio Financial, it will become the second largest NBFC with a market capitalization of close to 93,000 crore rupees. In fact, it's even bigger than Shriram Finance, M&M Finance, L&T Finance and Poonawalla Fincorp. But the main reason is yesterday there were nearly 54 crore shares that traded on the IRFC counter. That is nearly 30% of the total public shareholding and nearly 4% of the total equity. The stock locked in an upper circuit of 20%, which is the highest move seen in IRFC since its listing back in January 29, 2021. In fact, in the last 1 month, the stock has seen, in fact, since listing, if you see IRFC stock has gained more than 10% only 4 times, and all these 4 times move that we have seen in IRFC has happened in the last 1 month. So what is so buzzing about the stock? Firstly, if you see IRFC is a market borrowing arm of Ministry of Railways. It is a no risk, no loss business model that the company has. There is no interest rate risk. There is no credit risk. Well, there is also no asset liability mismatch risk when it comes to IRFC. And from FY17 to FY21, if you see, it had financed nearly 40% of the capital outlay of Ministry of Railways. But there are some risks to this rally that we can currently see, because if you see in FY23, their disbursements were down nearly 46% on a YY basis, and for FY24, the management has so far not got any indication from the Ministry of Railways of what would be the financing that they would be requiring, because in the budget, the capital outlay for railway was at close to 2.4 lakh crore rupees, and this was supposed to be financed via budgetary support. So no clear indication on the funding requirement for IRFC has been currently given, and they're expecting some more clarity to come in the second half of financial year FY24. And if you see, the capex requirement also from IRFC has been on a declining trend. On FY24 it was 46%, and in FY23 it came down to only 19%. But the biggest risk coming in for IRFC going forward is the fact that the government might be looking to dilute their stake. Currently they hold around 83.4% stake, and as per SEBI norms, by the end of January 2024, they'll have to bring down this holding to 75%. So that is a bigger risk coming in for IRFC going forward. Also, the valuations have become expensive. It is trading at close to 1.9 times price to book, while the average valuations were so far around 0.8 times.
Soumit, we have our guest with us. Gurmeet, so just a quick follow-up on Geofin. Do you think the stock can double in the next 3 years?
I think it will create tremendous wealth. If you do some calculations, Ajay, for example, what do you think the lending book would be, let's say, 3 to 4 years from now? I think it would probably be in top 3 NBFCs. Bajaj Finance, for example, has now almost nearing 3 lakh crores over, let's say, a 10-year period. So I think Geo could probably do that in 5 years, 6 years maybe. Plus, as I said, they will incubate more businesses on asset management. So you have to actually evaluate it more with Bajaj Finserv actually, than just the lending arm of it, right? So I think it can create a lot of value in my opinion. But as I said, you have to test it once in one credit cycle. Bajaj Finance has multiple stress tests, right? And Finserv, which was COVID, Demon, etc. We've seen so many credit events in last 10 years. I think the real test will happen, and that's when your credit underwriting skills get. So I think I'll not be surprised if it's too
right. So after of course getting listed and all this action happening, there are some big names also doing the round who will be heading their asset management business. But of course we cannot talk about those names, but you can find out yourselves. Some interesting names doing the round. You heard of it too, right, Nisha? We can talk to our viewers about them. But coming back to Nuresh, in fact, why don't we take some BTST trades?
Okay, time now to take the BTST trades. Buy today, sell tomorrow. Nuresh, what do you have on your radar?
So first is a buy on Reliance Industries, going defensive here, stock trying to bounce back from 20 and 2400 mark. Stop loss at 2400, target price of 2500. Second is a buy on IndusInd Bank, knocking at that 1430, 1440 resistance, preempting the move here. Stop loss at 1410, target of 1470.
That's a BTST trade coming in. Kunal, what about you? Do you have BTST or STBT, given you believe it's getting a bit toppish?
No, I think toppish is part of a process for the mid caps and small caps. But then in terms of few stocks as a BTST trade, to buy calls, NBCC, the stock giving a breakout about that 58, 59 mark today. So would suggest a buy with 66 as a target, stop us at 55. And Glenmark Pharma, in fact, many of the pharma stocks are making a very good comeback for themselves. Glenmark Pharma at 790 approximately levels looks attractive for 805 as a target, stop us at 772.
Okay, so those are the top recommendations coming in from our chartist. You know what, let's do one thing. Let's go across to my colleague Sharat to also find out what the chatter is like in the dealing rooms today. Sharat, which is the most talked about stock and why is that?
Well, in focus is Devyani International, and what we are hearing from the dealers is sustained buying is coming across DI counters. And looking at the volumes also, if you look at it, it's coming in almost 14 times its 20-day average. Apart from this, of course, the stock at its all-time high levels as well, and the key DIs invested already in the company includes the name of Nippon Mutual Fund, and also QSR counters are also buzzing and HNI activities happening, and this is because of two reasons: anticipation of the festive season demand, and also there has been stability in certain raw material prices, especially on the cheese front as well as on the poultry front. Now going ahead, the triggers for the companies, especially a turnaround expected for the SSG growth in the second quarter of this fiscal year, and the company plans to add roughly 275 to almost 300 stores this year as well.
All right, Devyani International is coming back on institutional radar. Clearly, it is visible on the charts as well. And by the way, it is actually the valuations of it. The stock is lower than Jubilant. So people have started moving some positions out of Jubilant into Devyani. But I would like to get Gurmeet's view on infrastructure kind of stocks. You know, so PNC Infra got very good order flow, GR Infra, HG Infra, and many other than today. Vishnu Prakash Pungalia actually got listed and saw very good response because they priced it intelligently 12 times forward. But after listing and after discussing the growth prospect, it comes to 9.5 times forward.
So that's pretty much okay.
Yeah,
Given
that
the
was
industry
very good.
average is 13, 14. But you know, from the infrastructure of the country, I want to move on and talk about the digital infrastructure that has been put in place, and that's by Paytm, and Vijay Shekhar Sharma is speaking at Global FinTech Fair. So let's cut across to that.
Means that gig economy or the obligation of gig worker is a mainstream job to be done in the country. We can expect literally 50 to 100 million people becoming in due course part of this gig economy. So when we talk about understanding for building for financial services, we could build just like what I'm talking about, the different kind of job profiles. In my opinion, the gig economy workers are treated literally not yet as an addition of the inclusion agenda either, because mostly the inclusion agenda is taken towards a sort of a rural or a poor person who takes some sort of grant or some sort of elements. But these are the people who are literally on the fringe of this border of nay or yay, and then from there on their journey has to start. So gig economy, pretty large segment of customer base. Most of us do not look at them as a potential customer because neither. So it's a very sad thing that they don't fit into both Venn diagrams of you have a job or you don't. At the same point in time, they don't have a job and they still have a job. If you saw the trailer, it was very uncomfortable to know that I think no company's performance evaluation system will be that real time a criminal to a person as this was. I mean, just because your ratings got downgraded, and I totally get it. Somebody does give a food packet and they actually tell me, sir, please rate. And I wonder that it must be a key KPI for them. And obviously I understand at the back of the things that a high rating system gets into this, all this gig economy worker. It's an extremely tough job. And as a financial system, we are not necessarily serving them yet. We are not necessarily understanding what their needs are.
Yep, and that's what we are talking about. One of the things that Nandita mentioned is they are on their own. And I'm going to come back to Nandita with a question about gender in this story. But before that, I want you to talk a little bit more about this. They are on their own. And how does the financial system, how will the financial system look at them going forward?
That's a commentary coming in from Vijay Shekhar Sharma, but the commentary which came in 2 days back interested me more in that. And that seemed to be suggesting that Vijay Shekhar is keen on raising his stake in Paytm. The stock has shot up to almost 3% at day's high. But are these the good levels to get into, or a rally has already happened in the last 6 months? Gurmeet, would you take a look at all these consumer stocks? They have doubled actually from recent lows though.
So I think what has changed is clear focus on profitability, right? And instead of just achieving scale, I also met some of the unlisted guys, including MobiKwik and others. I think the focus is clearly a glide path to profitability. Paytm also is, other than payments, is developing a very nice co-lending platform. The lending business is actually what's doing the heavy lifting. The payment business is also stabilized a bit. And this news of obviously promoter hiking stake is good, and group reducing stake is also good from a, if I can say, from a geopolitics point of view, right? So we are looking at this space, but we haven't really started digging and buying some of the new age companies. But we do like Paytm, Zomato, even Policy Bazaar. I think Policy Bazaar, especially, very asset-light model marketplace for both lending and insurance products now. The lending platform also stabilizing, and I also consider Geo Financial as new age as anything else. The way it will evolve. There are a lot of some very niche lenders which are evolving digital lending in a very, very good space. So you probably can create a 4-5% basket within the 100% portfolio of yours. Put some exposure in some of these new age companies. Be ready that some of the investments will go bad, and some of them will probably be 10-20 baggers. I think that's the best way to play this, rather than just going aggressive towards one or two counters.
Better to diversify your portfolio and not put all eggs in one basket, given the fact that some of these companies, the new age companies, will definitely be disruptors, and some of them might just go the other way, so you'll have to wait and watch for that. But one space which has been doing really, really well for itself and building onto gains is the real estate pack. We are seeing good gains coming in there, right from a Lodha, which is up around 5%. DLF is seeing quite a bit of traction. Kunal, which stock looks the strongest? Because a lot of them have actually run up quite a bit. I think Lodha was one of the ones which hadn't run that much, and it's catching up today.
Yeah, it's catching up quite well, but I've learned this from stock markets that when you're betting on high beta sector, you bet on the formidable stock within the high beta spaces. You don't go with the extreme high beta stock within such a high beta sector like real estate or sugar, etc., where these stocks, they tend to move up 20-30% in a short span of time. And I think looking at the statistical part, I think DLF comes out to be one of the more formidable names, least amount of volatility, at least looking at the last many years of charts for DLF as compared to the other peers. The stock tends to get into a time-wise correction every time whenever the sector goes into a price correction, and that's generally considered to be a healthy sign. In fact, even today or yesterday, the stock made a fresh high of 520 plus levels, breaking past towards 2009 high for DLF. So that's the most formidable name from the real estate pack if I have to choose one.
Gurmeet, will you concur with the view? DLF, you are closer to ground where they operate. Is that doing very well in the NCR region or not? And would you play through the real, through the direct real estate players, or cement is one space which is coming back, home building is doing okay for itself? How would you play it?
No, I agree with Kunal on DLF. I think if you see last year, their pre-sales were almost 15,500 crores, which was ahead of their guidance. And they're clearly they recently interacted, or the management interacted with few leading brokerages over a call, saying that the development side continues to see very robust traction. They have a very good pipeline, both in luxury and mid-end. They want to double the retail portfolio also. The office segment is also doing pretty well. And most importantly, the balance sheet is in great shape. I think what is happening is that the impact of RERA would now be visible in this sector. You will see more bigger, stronger builders, more corporate builders now. The local builders are, as it is, especially in North, are disappearing. So the stronger ones, if you see the last 7-8 launches, they're all by, if you take NCR, it's largely DLF, Godrej, Max, and L&T. That's the bulk of the post launches which have happened. But we like building material, as I said. We've been owning cables and wires, Polycab for a while now. We like the tile makers. I think one big theme which all of us are probably witnessing is this entire home improvement. We are spending more on our kitchens, on our in our bathrooms, on our bedrooms, whether those are in terms of tiles, in terms of the decor, etc. So I think that story is more long term and more durable, and better return ratios as well compared to the developers.
Yes, home improvement is one thing that definitely all of us are spending a lot more on, and perhaps the other space where we are spending a lot more is hospitality and travel, because that space is firing away too in the not just the trading session today, but otherwise as well. That space has been doing okay. I'll come back to that. But before that, Naresh, I want your top bet within the IT pack, apart from Wipro, which you have of course talked about. So which is the other IT name that you really like?
So the earlier one was Persistent, which has also moved up. Wipro is there, and now HCL Tech is the one which looks most promising in the large cap IT name, because that's the only one which has recovered really fast and is closer to the highs of last 1.5 years. So that's a stock which looks more promising, could break out down here. A buy on dips on HCL Tech.
The top, bet after Persistent and Wipro, which have already moved up. But Gurmeet, what's your take on IT?
I think we'll probably see another quarter of soft numbers. How much is it in the price? I think the verdict is still, quite divided on that. I think there is some slight uptick in deal momentum. It's not as bad as what the street feared, but I do think generative AI will create a lot of disruptions. But the industry has seen that over last few decades, a lot of disruptions. So my view is you've got to be a little selective, right? I probably think that among the larger ones, HCL looks the most reasonable from a risk-adjusted point of view. Tech Mahindra is undergoing again a leadership transition, so probably we'll have to see how much change the new team brings in. And in midcap, I think you got to be selective. So you have people like KPIT, which have done extremely well. It's a more an auto-embedded software play. And then there is a couple of mid-cap names which have done well, including Persistent and others. So got to be a little selective. But I think maybe a quarter away, probably it's a little too early to jump on, IT. Probably when the Fed formally pauses and says that we are done. Even if you miss out 5-10%, I think that's a better time to go overweight IT. For now, I think I'm neutral. I'm not exiting, but not adding either.
Not in a rush to add more positions, just wait by and get more clarity as to which way the deal pipeline and rest of the momentum is panning out. We've talked about the spaces which are doing well, but Kunal, which is that space which you think is getting very overheated and perhaps one should look at booking profits? We have today seen quite a few metal names and cement names are coming under pressure, and even PSU Banking, some of them. Are there candidates where you would suggest to take profits?
I think the two stocks within the power space which looks frothy are REC and PFC. Okay. So I would not call that the entire power space is frothy, because many of the stocks like Power Grid, etc., these stocks have gone through a mild correction for themselves. But I think PFC and REC is where I would expect a decent correction, at least a broader 10% correction from the recent swing highs or the lifetime highs, in fact, for these stocks is something which I would probably expect over the very near term. There are a few stocks from the railways pack which are also looking a bit frothy, because I think most of the RSIs for these stocks are now upwards of 92 for these stocks on the daily time frame, which is extreme overheated for the stock price. So the best strategy over here is to either book 50% profits at current levels and then keep a 2-day or a 3-day low as a trailing stop loss for this trade. So the stocks where the RSI has gone to an extreme overbought territory are the ones where I would probably advise profit booking as well as starting to trail stop losses, rather than just expecting that this momentum would continue and the price gains would consistently flow into these stocks.
Okay, so those are the places where you should get a bit more watchful, maybe try booking some profits because it's getting a bit frothy. But you know what, let me take a quick dipstick survey, as we call it, and talk about 20,000 on the Nifty. Naresh, when do you see it happening? September itself, a few weeks, a couple of months? When do you see 20,000 on Nifty?
So, as of now, the view is in September.
But itself, Kunal?
26th September.
Oh, so he has a specific date in mind. Forget the week, forget the month. He has a specific date in mind. Gurmeet, what about you? Do you also expect 20,000 on the Nifty to happen soon?
No, I don't know. I don't know when it will come. It has to come. But when it will come, I don't know. But as I said, I think this decade is looking good. We are more on the long side. I think the things are beautifully positioned. It's just that you have to avoid accidents. And I agree with what I said before. A lot of fraud building up small micro cap plays. Also, the most discussed sectors, defense, railway, and stocks basically going up only on order book. Just be a little careful. We've seen that, right? Specialty chemicals, graphite makers, electrode makers, anything fashionable, just be careful.
And there's a lot of fashionable sense in the market. But you know what, Kunal? Why 26 September? Is it your birthday? Is it somebody else's birthday? Is it a special day?
I was waiting for you to ask me that question. So you'll be amazed. This rally started off from 17,000, sub 17,000, March end. Okay. 26th of March is where we hit 17,000 first time. 1 month later, that is on April 26th, we hit 18,000.
Oh.
2 months later, that is in July, we hit 19,000. 26th again for the first time.
Wow.
That's June. 2 months later, we hit 26,000. So by that, we can expect 20,000 by 26th of September.
That's a very, very interesting analysis there. I don't know what got you to do that analysis because I wouldn't have thought about it. But the other thing that we're watching out for is the World Cup, right? And of course, the team announcement happened today. I will have to confess my ignorance there, Kunal, because I don't know too much about it. But I think the squad has been announced. Rohit Sharma is the captain. Anything that you're watching out for? Any surprises, any misses?
No surprises. I think Tilak Verma is left out because I think he's a batsman in form. And I think KL Rahul has made a good comeback. So after injury.
Any other comments coming in from you, Gurmeet or Naresh, on the cricket if you're big followers?
No, I just think they've done too much combination going in. While the heart says that India should do, but the head says that somehow the top order is not in great form. I just hope they probably peak at the right time. I just hope things work out well.
So you have the visuals as well there for the team who are of course been gearing up. They have a lot of matches to play already in the Asia Cup. Then there's a series coming in with Australia. And then of course the World Cup, which will be happening right here in India. I don't know how many of us have managed to get the tickets so far. But of course India, Pakistan and the finale, that's the one that all of us have been trying to get our hands on. But it's the finale for the market, at least for the trading session. Thank you, gentlemen, for joining us today. And the finale for the market has been all right, not too bad at all. Very close to that 19,600 level. So almost at the session's high. It's the broader markets where the maximum amount of vibrancy is. Look at the mid-cap and the small-cap index. They have been eking out gains of 1% on pretty much an everyday basis. No surprise that it's a record high yet again. And the market breadth was also okay. What was doing great in the market was the pharma pack. So we were watching out for what was happening with the likes of Glenmark, Torrent Pharma, of course, continue to be in news on account of that deal flow. But then Aurobindo Pharma as well as Laurus Labs were some of the stocks that were gaining. In terms of the media stocks, it was the entertainment which was doing quite a bit of gallops and somersault in the trading session. Real estate stocks were also building on to gains. So Lodha, Oberoi Realty, DLF, all of these stocks were doing okay. What was seeing profit booking was clearly banks, and that remains really the weak point for the market and the financial services too. So not much support coming in from whether it was a Chola or a PFC or even names from the banking sector did not do much, whether a Bandhan, HDFC Bank, all of them were in the red. Indiabulls Housing Finance was also seeing quite a bit of profit booking. In terms of the gainers, however, it's Raymond that deserves mention, an 11% uptick on account of those two initiations. So overall, I have to say it was a decent trading session coming in for the Indian markets. The likes of Apollo Hospitals, Wipro, these were the ones that were gaining ground today. And on the losing side, we did have some of the losers in terms of the auto names, Ultratech Cement, Dr. Reddy, SBI Life. But overall, goes on as a great day for the market, especially for the bulls. But with that, it's a wrap on this edition of Closing Trades.